So we're going to be discussing turbocharging credit with securitization and tokenization. It's a lot of izations, but I thought, why don't we start with some introductions for the crowd, and then we can get into the definitions of what we're actually talking about here.
Sure. So, hi, this is Prasad. I'm one of the co-founders at Homeville. We started off as a fintech, branched out, got our NBFC license, so started building our own book. And we realized that there is a problem between bridging the TradeFi, DeFi space, and therefore we reached out to Sanmesh, whether we can work with Finternet on building some kind of a prototype, right, which can solve some problems that we face as traditional lenders who are open to tech, but at the same time don't know the way to navigate. So we've been working with them for the past 3 months now.
More than that, I think.
Yeah.
Time flies.
Yeah. So, hey guys, very excited. And because it's after lunch, I believe everyone is going to be sleepy. So I'll try my best to make it as, entertaining as I can. So I'm Sanmesh. I have joined as director of Finternet with respect to partnerships and the business track. Before that, I was in the boring traditional finance business where I was responsible for securitization vertical at Tata Capital Housing Finance. And before that, I was in fintech for about 6 years. And before that, I was in media. So pretty much a multi-sector experience.
Thanks, guys. Yeah. And obviously, I'm moderating, Kieran Parker-Maroney from Bonk Advisory, but I have previous history as a VC in the prop tech industry. So very interested to hear what you guys have to say today. Now, we obviously have a knowledge of securitization, and I know it's not in the title, but there's already also direct assignment, very relevant to this. I think rather than just assuming all of you know what this is, why don't we delve a little bit into what these two terms actually are and why it's relevant for you guys and for tokenization. But if we start with, what is securitization and direct assignment?
Okay, I'll start with the basic thing in a very simple word. So if you look at economy of India, it's about 4 trillion, but securitization market is very nascent in India. It's about 26 billion. And securitization basically has two components. First one is direct assignment and the second one is pass-through certificates. It sounds very boring or very intimidating, but direct assignment in simple words is if I'm a small lender, a small bank, I require a lot of liquidity, right? So I won't get the line of credit which I desire from a bank. So what I do is I have my existing portfolio. For example, if I have 100 contracts of home loans, which I've underwritten and it's already there for 7-8 months, it has another line for about 5 to 6 years or 10 years. Can I sell that to a larger bank? So what happens is the larger bank gets a better top line and I get better liquidity. So that's how it is done. However, right now, the market is very slow because first of all, me sharing that entire data is not symmetrical. Everyone has their own standards. There's a lot on to and fro. And one deal takes up to 1 to 2 months to do it. And post that, once the deal is done, there is calculation from the originator side, from the investor side about the same customer. So there's a lot of mathematical computations, which in even today's world is happening on manual Excel, which is very strange and very weird as well and very risky. And for the investor as well, what is happening is that whenever repayments are coming from the existing book, they have to wait for 1.5 months to get that money. So there is 1.5 months of free float with the originator. So there are lots of inefficiencies within the market, and direct assignment is about 45% of the entire securitization market in India.
And direct assignment can apply to individual loans or mortgages, right? You can can sell them as like one thing rather than packaging everything together.
Yeah. So if you look at the entire structure of direct assignments, it's only done between lenders. It can be NBFCs and banks only. It's only limited to entities. But the product types can be anything, predominantly mortgage or unsecured loan as well, gold loan as well. It can be anything, but it's limited to basically entities. However, the 56%, which is the pass-through certificates, that's where what happens is the same smaller NBFC creates a structure, a special purpose vehicle, where then that special purpose vehicle can be subscribed by retail participants or by family offices or by banks also. So it's much more fluid in nature.
But you're still talking about these instruments are generally reserved for like ultra high net worth family offices, banks historically, and they're a sort of next level of liquidity efficiency. but they're still inaccessible for, I guess, most people in the audience, right?
Yes, that's true.
So
Right now, it's pretty
before we
much, yeah.
get into the nitty-gritties, can we do a quick show of hands? How many of you are techies?
Wow.
That's impressive.
Brilliant. Okay. How many of you here are super comfortable with blockchain, what Solana has done, what are smart contracts? Don't be shy. If you're super comfortable, great. If you're not, that's also okay.
Not bad.
Right? Believe me, all of us at one point of time did not have a clue. And I hope events such as these will help and solve that problem. All right? Vineet is here.
Oh, wow.
Here's our super guest.
Right.
So he's going to get mic'd up. Yeah.
So let me give you a bit more background about why I think this is super exciting and why I think technology-oriented discussions and technology-oriented development can really help bring a delta. Okay. So one of the problems that we see in the Indian ecosystem, right, is that the amount of time it takes to get a single loan is very high. I mean, if you've done a personal loan, it is within minutes. There are apps. It is instant. You typically get the funds in your account within matter of minutes. But have you anybody has tried seeing a home loan process? I mean, it is painful. There's only one word. It's painful. Okay, and it takes easily up to a month, right? You don't want that kind of a problem in an economy which is growing at the rate at which we are, right? Second problem that we see is that a lot of the lenders who are providing mortgages, home loans, right? These are long-term, long tenure loans, right? To give those loans, they have to take loans from banks and larger FIs. And there you typically see short tenures. So effectively, if I run out of capital, how am I going to give more loans? So therefore, at different points in time in the evolution of a lender, you will always have some way of liquidating your existing assets and then raising capital.
So it's fair to say, like, securitization, and then by extension, we'll get onto this with tokenization, is increasing the velocity of this capital and your ability as a lender to create more opportunities for people like in this audience who want to buy a home.
Correct.
Right.
Correct.
So obviously, given the discussion we've had there, understand what these products are, it sounds like there's a lot of inefficiencies in them that you guys have touched on. There's obviously a technical angle here and there's a business angle. Maybe we start with the business angle first, since it's the title. How do you guys view tokenization as helpful or the next extension of securitization with credit?
Okay, so should I take it?
Sure.
Yeah, okay. So basically just 3 points here. First, tokenization, what it will do is it will standardize the data packets which are there. Right now what is happening is lender A talks in English, lender B talks in Hindi, and there is no correlation and it takes a lot of time. That will kind of plug in and that will improve speed. Second one is there is a lot of maths involved because by direct assignment definition, in terms of RBI being compliant, you have to split the entire contract. Each contract has to be split by 90:10. And then you have the interest component, which has to be split by hurdle rate and the residual rate. And multiplied by 180 months. So there's so much amount of maths, and there is, if someone does part payment and stuff, so there's a lot of things. So if you have smart contracts there, automatically it will be atomic settlements in terms of that. And that what happens is the third point, which is a secondary order impact. The investor who waits for 1.5 months for getting his entire settlements is now getting it in real time. So what will happen is this will enable positive butterfly effects, which will greater enhance the entire direct assignment market.
Yeah. And Vineet, welcome. Sorry, I know the traffic's famous.
Actually, I did not anticipate the Monday
Tech can't solve it.
Yeah, probably you could tokenize traffic and probably that would.
Perfect intro in. I mean, I would love if we could talk a little bit about the technical aspect of how this tokenization would work in practice. Maybe we could start from a high level.
So, actually, I'll just take off from where Sanmesh was saying that how tokenization would improve. The technical term is transactability. So once you sort of tokenize loans, there are two parts to it. A, transactability improves. So for example, in securitization, now you want to create from loans to loan pools. So you want to sort of bundle these loans. And the view for creating loans to loan pools becomes public. So it's publicly accessible, but with privacy checks. So these are the two parts that are, they sort of go hand in hand. Like in public blockchains, we say that, oh, tokens have to be like publicly viewable, but then you have like these controlled regulations that you need to sort of consider when you're bringing in RWAs. So when we were working with Prasad, so we've been iterating over how this workflow will sit over, say, public blockchains, Finternet, and so on. So the idea is, we need to consider the amount of data that is sort of being ingested, because it's not just that you are creating a token. This is like a lot of real data that has to be ingested and has to be computed. So then the technical challenges are what would sit off chain, what would sit on chain, and then what is verifiability, what should be verifiable, what is implicit for a regulator, and then the transactability aspect. So all these three aspects sort of, they open up the business perspective. Like now investors can come in for loan originators, they can see, and there could be a marketplace for people who are actually originators to bid on these loan tokens. And so Prasad can sort of take on this. So once we sort of create the rails for this, we could sort of have a marketplace where investors can selectively see what are the loans, what are the loan pools, and the actions can sort of be happening in a very efficient manner.
Right. So to the point we discussed earlier, with historically a lot of these things have been inaccessible to most people, right, unless you are the top 1% of the 1%, or you're a merchant bank or investment bank, whatever that is. Tokenization allows some sort of democratization of access. Is that fair to say? And also speeds up the process for loans.
It is not just democratization; it is also standardization.
Yes.
Right now,
Standardization.
Yeah.
Right.
And it also brings in privacy rails, which are just not there at this point of time. Currently, in the traditional sense, if you want to do a transaction, typically what will happen, and get this, two parties will talk, they'll typically speak over phone, then they will take the entire loan portfolio in an Excel and just send it over, right? So PII, etc., it's Excel, right? Then the investor who is buying the pool will typically ask for more additional information, right? It could be sample checks, KYC docs, asset docs. All of those are also sent. Maybe this could be over a shared folder, right? But there lies a major gap that the transaction hasn't happened. The customers haven't been, handed over per se. There is no contract, and the data has been shared. This can be done over a multi-party compute solution. This thereby protecting the privacy there, right? Similarly, the amount of time that different loan management systems have to work on creating reports. I mean, typically your standard lenders will have a separate team just for creating reports, right? And then every transaction might have an additional column in that report. So we'll spend one sprint on just developing that one column. There's a whole wastage of time in the to and fro, right? Now, if you can standardize how you are going to save all of this information as tokens, and then standardize the sharing of information, right, without really exposing the information, then I think you've solved a big problem in this entire transaction and the turnaround time for that transaction.
So they're two. I think people would be forgiven for thinking they're two opposing concepts, but they're not. You are increasing transparency and also increasing privacy by doing this, because you can standardize data, but then through, I'm guessing, certain aspects like ZK, you're able to say, I don't need to provide all this data. I can protect my private information whilst also speeding up the process of evaluating for a loan.
Yes.
And so in practical aspects, what does that look like for people here, if they're looking at a mortgage? I mean, maybe this is a good point to speak to what you guys are building with your projects.
So one of the things that we would typically want almost all developers who are working with loan management systems is reach out to us and figure out a way that how they can build this tokenization capability within their platforms. I am sure that over a period of time, this would become a standard feature that would be requested by lenders that, hey, I need this capability to tokenize my loan assets, right? And there is one set of, call for volunteers, so to say, where you could work with somebody like Vineet on figuring out how to start tokenizing the data within your different applications that are being built, right? If you see the loan management software market, it's very fragmented. At the top, you have the 10, 15 market leaders, but at the bottom, everybody who has an in-house team is well on their way of developing their own loan management systems, and there lies the gap in standardization, right?
So from like a developer standpoint, it's about thinking what would a loan token look like. For example, if you want to capture different kinds of workflows, how would you like capture data, and then how would you capture the computation? So you want to modularize, for example, the repayment schedules. You want to be able to trace it back as to how the contract got executed, who initiated the contract. So the workflow sort of need to be figured out, and it's like an iterative process. With like Prasad, we have been trying to figure this out, and it's an open call to whoever is sort of working on loan management systems to sort of reach out and it's more like a public forum discussion.
So,
post the first time.
So actually, with respect to democratizing access to democracy, right? Democratizing access to people. I had a fantastic suggestion from Pramod Rao only about we have started from direct assignments, but direct assignments basically from business to business, like lenders to lenders. If we expand it to the pass-through certificates, where through SPV it can be anyone, individuals can also do it. There are new emerging businesses which can come in the DeFi world as well, where, for example, if, as Prasad pointed out, the moment the loan is created, it's tokenized and it's put out there. People, if they develop technologies where, the originators want to take liquidity out at the earliest, you can get that access to DeFi audience as well. So there'll be more amount of money flowing in. And
Brilliant.
that perhaps can be the future in some years with the regulatory guardrails.
You guys make my life so easy. That was my next question, and they answered it for me. So, if the builders are in the audience paying attention to this, there's 3 calls to action there. So make sure to come and speak to the guys about those ideas after. I think we've got a couple minutes coming up, but I'd ask, how does that feed into what you're working at with Finternet?
Actually, we are very excited. So we are tight-lipped for today because tomorrow we have a demo at GFF. Not tomorrow, actually, day after tomorrow on 8th, where we are going to show what we have been up to. We are going to show 5 use cases, out of which direct assignment is going to be one. And let me tell everyone that this is the most mature use case, which is already in UAT. So it's going to be out soon. So I'm putting some kind of pressure on the tech side on that. So yeah, that's how it is.
Is that why Vineet was late? Yeah, putting pressure on him. Yeah.
That's why I was late. So
Same question, Prasad, to you with Homeville. Like, are there ways that you see this naturally fits into what you're building?
So a couple of things. At Homeville, we have always taken a stance that credit should be commoditized, which also means that a lot of the friction that is there within the ecosystem that has to be removed over a period of time using tech. And we have been always building tech to reduce that friction. So we started off with CLM2 platforms. We started off with our own lending management system. And then we realized that there is a gap where we also need to solve treasury level problems so that I can raise more debt, or maybe I can sell my portfolio. And therefore, this it was need of the hour for us. And what we typically tend to do is we tend to build our own conviction using our own platform, and then realize that, okay, this can be then essentially offered to the larger ecosystem as a product that can be scaled with multiple users using this.
So there's colossal opportunity here. I mean,
Yeah.
to your point earlier, Samesh, so it was 4 trillion. What was the Indian economy, and was it $26 billion was the securitization scale?
It's 4 trillion in terms of GDP, around that, and overall securitization market, if I'm not mistaken, is around 26 billion. So
Right. So if you're looking for
penetration is very
somewhere to introduce efficiency, there's a ton of opportunity in this space, right?
Yeah, for sure.
Well, we're running up on time, so I hope that's been educational for everyone. But I'd like, please, a round of applause for the panel. I think that was brilliant.
Thanks. Thank you.
Thanks, guys.
Thanks, guys. Thank you.